Mickey, Mickayla, and Taylor are starting a new business. They're going to call it MMT. To get the business started, Mickey is contributing $315,000 for a 40% ownership interest. Mickayla is contributing a building with a value of $315,000 and a tax basis of $178,750 for a 40% ownership interest. And Taylor is contributing legal services for a 20% ownership interest. What amount of the gain is each owner required to recognize under each of the following alternative situations? Okay, let's take a look at the guidance provided in Section 351. This section applies to corporation and states that no gain or loss is recognized if property is transferred to a corporation by one or more persons in exchange for stock, provided the transfers are in control of the corporation immediately after the exchange. However, services like Taylor's legal services are not considered property under Section 351, so Taylor's contribution would not qualify for non-recognition treatment. Mickey and Mickayla's contributions of cash and property, respectively, would qualify for non-recognition under Section 351. Now, let's focus on Section 721. This section applies to partnerships and provides that no gain or loss is recognized to a partnership or its partners when property is contributed in exchange for a partnership interest. So similar to Section 351, services are not considered property under Section 721, so Taylor's contribution of legal services would not qualify for non-recognition treatment. Mickey and Mickayla's contributions of cash and property would qualify for non-recognition under Section 721. Now, let's talk about gain recognition. With regards to Mickey, no gain is recognized for Mickey under either Section 351 or 721, as cash contributions do not trigger gain recognition. Let's talk about Mickayla. Mickayla does not recognize gain under Section 351 or 721 because the contribution of property, which is the building, qualifies for non-recognition. However, if the building were subject to liabilities exceeding its tax basis, then the gain might be recognized to the extent of the excess liabilities. Next, let's talk about Taylor. Taylor must recognize income equal to the fair market value of the partnership or corporate interest received in exchange for services. This is treated as compensation income.